The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 29th. How about that, folks? Leap year edition of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We get to go figure out what it is they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free, pick up that phone, dial on in 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Would love to hear from you. So let's go ahead and get this show started on this magnificent, magical Monday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 55 points. She's trading at 16,694. S&P up 6 points at 1954. NASDAQ Composite up 21 points, trading at 4612. Russell 2000 up 6 points, trading at 1043. The DAX closed down 17 points. The FTSE was up a point. Gold is up $12, trading at 1232. Silver up 15 pennies, trading at 1484. Light sweet crude up $1.05. That's trading out at 33.83. Leading the charge here to the upside, dollar-wise, price lines up $25, about 2%. Signet Jewelers up about 11%, up nearly $11. Chipotle up $10, 2%. Amazon up $8, 1.5%. To the downside, you've got Endo International PLC off $9. That's about 18%. To the downside, United Foods off 20%, down nearly 8. Hanger Inc. down 60%. No idea what's going on there, but it's off 7 buckaroonies. So where do we want to begin the day today? It's, at the end of the month. Hey, by the way, for those of you that are going to, and I hope that all of you are going to stay tuned to listen to the show following me, David White's show out there, our polar bear, make sure you say happy birthday. How lucky is that? He gets to be born on the 29th. That's why he looks so young out there. You only celebrate that birthday once every 4 years. I do believe he is now 14 years old out there. How great is that? Now, with regard to the markets, of course, they're reborn every single minute, every single day, every single month. Just depends on what time frame it is that you trade out there. So we'll take a look at multiple time frames and see what the message of the market is on each of those. So even though the month hasn't closed out here, I still think it's incumbent upon us to go ahead and take a look at, what's going on during the month of February, get a grip on the markets, try to see what the market is communicating to you and I. If we take a look at the short-term charts out here, we'll start, I believe we looked at this on Friday. If not, I think I looked at it with Tom during during the segment that I did with him at about 3:15. And one of the patterns that we had identified was the mere fact that the NASDAQ on its 5-hour chart here had made really one of our favorite topping and bottoming patterns out here. If we take a look at that, let me just do this here. If we take a look at that pattern, price moving lower, doing it less relative weakness out here, nice little morning star. This had a nice little evening star up at the top out here as it made its high. This was on Friday. We had confirmation at 2 o'clock. With regard to that pattern, additional follow-through into the contract close at 5:15 in the evening. Then we had price move down. You had the market, I think it gapped up just a tad last night, at least in the ES, maybe the NQ, no. I actually don't recall in the NQ. But in any event, but the market did trade lower. So this pattern here that shows this is a topping pattern, and until the high is taken out, that's the high here from Friday, the price point, I'm going to try to give that to you, 42.93 and a quarter, and the pattern is still in effect out here. But what price did was it went down to its first support level, right? Whenever you're going to create a target for a move, you're going to get into a move out here. You're going to do your reward to risk calculation, right? And so whatever time frame chart it is that you are focused on, you're going to go ahead and create a target. Now, you may not have created a target of 41.82. You might have used the swing point, which would be down here, the previous swing point about 2 o'clock in the afternoon on February 24th. That would certainly be valid. But you and I, we have these additional tools on our system. So we know where these hidden, not so hidden, when we take a look at what TFNN has to offer to you, we've got our TAS market profile. So price was supposed to come down and test the level of 41.8255. In the overnight hours, coming into about 6 o'clock in the morning out here. Well, this says 4 o'clock in the morning. The low was 41.8450. 41.8450 versus 41.8250. $2. $4,000 valued vehicle out there. You kind of love that. And then the bulls, the cavalry was up early, came to the rescue. Nice little bullish engulfing candle. Says that 41.82 level is really important. Now, there's a possibility that there's an A to B equals CD to the downside. That could be completing out here because we've just seen a retracement, visually looking like about a 0.618 retracement thus far. Could be a 0.786 retracement. So we never know, but we do know 41.82 and 50 cents or so is going to be a key level for us to be watching if, in fact, the market decides to move to the downside. Now, why would it move to the downside out here? I don't know if it will or it won't. But if we take a look at the 30-minute chart out here, here's what we're going to notice. We know that when the high was formed out here on Friday on its time frame, that was right here at 5:30 in the morning. So at 5:30 in the morning, off of the low that really came in at 11 o'clock in the morning, that was back on February 24th. Off of that low, we know that there was that wonderful seventh inning stretch session that was formed at the high. And what took place this morning, earlier this morning at 4 o'clock, as price was moving down on the 5-hour chart, was moving down on the 30-minute chart. 5-hour chart runs into support, right? Our TAS market profile. By the way, the point of control closer to the bottom of the box, what did that communicate to you? That's right. It told you exactly where the front line of the buyers were lined up. Then we take a look at what went on in the 5-hour chart, moves down, wave number 7, does that nice wave, moves down with less relative weakness out here. Even though it doesn't say so on my chart, this is a 4-river instead of a 3-river morning star. So you had a nice little bullish reversal signal. Now we're in wave number 5 to the upside. Maybe we're going to get to wave, when we do get to wave number 7, should we get to wave number 7? And we got to keep our eyes glued to the chart to see if, in fact, that is the next topping pattern. Maybe not out there, but we aren't there right now. Could we get there before 4 o'clock or before 5:15? And the answer would be, yeah, it's mathematically feasible to do that. 42.47 ought to be some decent support. No, I'm sorry, it's 42, about 42.32 is the number with regard to support. At this stage here, the way the 30-minute chart is lined up says sellers are the ones that are in control of the game as we speak right now. We'll see what happens at about 42.47. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 49, S&P is up 6. Russell 2000's up about 6 points as well right now. And before we went to that break, we were taking a look at, so we looked at a 30-minute chart. We looked at a 5-hour chart out there of the NASDAQ. And I'm not specifically focused on the NASDAQ for any one reason or another out there. Well, we do want to pay attention to those highs on that 5-hour chart because you take out that seventh wave pattern to the upside out there. You take out that price relative strength divergent pattern. It says you've got a strong move that is underway. So we want to be paying attention to that. We also want to be paying attention to the potential setups of maybe an A to B equals CD to the downside. That would set up a potential Gartley buy pattern. And let's take a look at the weekly chart out here real quickly. So we're looking at the futures contract. And as we take a look at it, here's a couple things that we know about it as well. Number one, when it made its high out here back on December the 2nd, same patterns that we just looked at on the, on the 30-minute, on the 5-hour charts out here. So these patterns, they're if you don't know these patterns, you've got to. And you are a trader. If you're an investor, you want to understand. If you're trying to learn technical analysis and charting, I'll tell you that it's one of the ultimate patterns. And if you want to learn about this stuff, send me an email, steve@tfnn.com. I can kind of get you in touch with the folks at TFNN. I did a workshop a couple weeks ago. If you didn't get a chance to attend that workshop, it's every time I do a workshop, I can't pat myself on the back, but I'm going to. It's a great workshop. And I mean that. In any event, to the downside, we see the same kind of bottoming pattern that was out there. We know Friday's session here, you got a little bit of a bearish reversal signal, got a shooting star, but no completed pattern, other than the mere fact that we can see that the price stalled on Friday, really right at a resistance line. I mean, the bulls and the bears, you and I know they can't hide. Their role is simply to paint signals for you and I. And they're not smoke signals. These are valid signals that we can look at on our charts out here to understand in the game of strategery, that we know where it is that the bulls and bears are hanging out. We'll take a look. Got a nice little bear sash candle out here on January 13th. You got another bear sash that shows its head out here on February the 2nd. If we just put a line tool out here, on our screen, and we just simply draw it across, I mean, is it really any secret that price would have found problems or stalled on Friday, creating that little shooting star candle out there? No, because it's just so evident with regard to where it is that the bulls and bears hang out when we take a look at a chart using Japanese candlesticks. Also something that is a must for you to understand. Now, shooting star, the opposite of the hammer candle. Here's what we know. In a hammer candle, if you close below it, if you're long, you're wrong. Somebody made up a nice rhyme, and I just couldn't remember it. But, shooting star, it's just the opposite. Means if you close above the high out there, it says if you're short, you're wrong. There's no rhyme out there, but it would say that, okay, you're up above a resistance level. So just like inside the NQ on the 5-hour chart, it's communicating to us that, hey, that's really strong resistance. Again, I'll give you that number out here. That was at 42.93 because maybe you didn't write it down. You clear that. On a daily basis, you're over resistance. On a 5-hour chart, you're over resistance. And then on a 30-minute chart, we just have to take a look and see what's going on at that stage. So the high out there from Friday is really muy importante to help us understand what the market does or does not want to do out there. At this stage, this doesn't tell us what it does or doesn't want to do on the daily chart, but it does help us really piece together the puzzle using multiple time frames. Now, if we go, and let's just stay with the NQ for the heck of it, and we go take a look at the monthly chart out here. Now, this monthly chart, you're going to see, if you're in the upper left-hand corner, you're going to see the NQ, and you're going to say, what the heck is the 1 and the exclamation point? This is a synthetic contract. It's a monthly contract. So if we really want to go ahead and use our TAS market profiles, the only way to do it effectively with accurate information is to create a synthetic contract. What's that mean? You can't actually trade this, but this is all the accurate data as it stitches together those contracts out here. Now, the interesting thing, I'm going to put this up on the screen here first. If we look at the monthly chart, we can see that price was moving higher, doing it with less relative strength out here. This is back in December. We had nice little bearish engulfing candle. You had follow through, obviously, in January. We're now in February. No reversal candle or anything along those lines. But when you have any kind of bullish or bearish pattern, you're going to first look to levels of support, right? Where is price going to take you to? Did it break those levels of support? Well, inside of the NQ, interestingly enough, the support level is down at 39.1510. That happens to be the monthly. That's right, we don't talk about it. We don't use them very often, but that happens to be the monthly profile level out here. So 39.15 is a very important level for the bulls and the bears to be able to watch what's going on. So we know price had been moving higher, did it with less relative strength out there, gave us that nice reversal signal, moved lower, and ran right into support and held support out here. What we also know about the NQ, what we know about the NASDAQ, we know about the NDX 100. We also know, let's go ahead, let's not use a green line, let's use a red line out here. We know that coming off of the 2009 low out here, that price has not even been able to get down to the trend line. So we've got quite a divergence. Well, it's quite a divergence, but we certainly have a divergence here with regard to indices or futures contracts with regard to what the market has and hasn't done. But here's what we know for sure inside of the NASDAQ. The trend is still its friend out here. It has not broken its trend. It has gone ahead and it gave us a signal that it was creating a top. Price went down to at least that first level of support and held it. It's now up above that monthly TAS market profile high. So that is at least monthly bullish out here. So what it really says to you and I with regard to what is it that the NQ is trying to do, I think that last Friday's high is really important. It's really important out here. Last Friday's high, if we come out here and get that little shooting star, I could possibly have set up an A to B equals CD. If we take a look at where that pattern would project price to move to, I would say it could, in fact, give you a 44.56. It could give you 45.57. Could get all the way back into the 46.85 area. One thing at a time. We know that this A to B equals CD does not come to fruition, has no chance of coming to fruition, not until you see Friday's highs get taken out here. So that's one of the reasons to focus on and taking a look at it on different time frames. That way, is there any conclusions that we can draw here? I think we went through them. We know we have a topping pattern. Price came down to support. It has bounced off of that support, and it's moved higher. And now we're going to see what other types of patterns unfold here on the weekly, on the daily. We haven't even looked at the weekly chart out here. If we did look at the, of course, that would have been last week, but we can just throw up the weekly chart, see what we have out here. What's the weekly chart? Weekly chart shows us, plenty of support down here. You've got this little hammer candle that formed back in October from a weekly basis. You've got another one back here in January, the last week of January. A lot of bulls hanging out right down here at these lows. But of course, we can see that we're just really kind of consolidating out here. So last Friday's high, last time I'll say it, is really important with regard to the Qs and where it goes. Now, we talked about, when we get back from this break, we talked about the correlation that is currently underway between light sweet crude and the markets, right? Probably till we're blue in the face. So we won't talk about it today. We won't talk about it. But what kind of correlation do you think there is between the transports and the Dow? It's pretty high. So we got to go take a look at the transports and see what message they're giving to you and I. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
back, folks. Dow's up 21 right now. S&P's up about 2 points. NASDAQ Composite up 10. We have some really smart folks, listeners out there. Folks in the Tiger's Den, what a beautiful thing. How about this? If you're short, abort. That comes in from two of our listeners out here. If you are short, abort. So I've gone ahead. I've written that down on a digital pad of paper so that I don't forget that, because that's as good as it gets out there. So we know if you're long, you're wrong. That's closing below a hammer candle. And if you are short, abort. And that is a close above a shooting star out there. Now, I baited you just a little bit because we've talked about the correlating pattern between light sweet crude and the stock market that is in play here, futures market. So we pay attention to that. It's not going to last forever. That is absolutely for sure. With regard to the transports, somebody wrote here the Virgin PLA, the Dow that's 6 minutes below there. So the correlation, thank you, Jay, the correlation between the transports and the Dow, and this is looking at it on a weekly basis, looking at a monthly basis, looking at a daily basis. Weekly basis, the correlation is 80%. Transports go up, the Dow goes up. Transports go down, Dow goes down, or vice versa. But they're both, in the same direction out here. And on a daily basis, it's like 76%. On a monthly basis, it's somewhere between 70. I think it's 78. So it's right at 76 to 80% correlation, day to day, week to week, month to month, with regard to just simply a directional move out here. And as Jay was pointing out in the Tiger's Den, that late last November, the Dow rose to a record high, and then they started moving lower. In fact, they were moving. Let's do this here. Let me put the transports up on my screen. We can add the Dow as a symbol. So let's do this. Insert the symbol. Let's go ahead and insert the Dow. Give me a moment to do this. And we're looking at the monthly time frame. Out here, we're going to go ahead and we'll use a candle. There we go. Insert it. Okay, so it should show up on the bottom of the screen. And I think that I might have to switch to the weekly to really let you see let's try the weekly out here. So let me change this here to weekly. This I'm doing off the screen. So that's the weekly, and get over to the transports. Let's change those to the weekly as well, just so we can show the divergence in price, because it is the transports that had topped early. We can see the clear downtrend, right? You can see the clear downtrend in it. If I just simply mark it off of the even the daily would even show it further. But we can still correlating pretty well, but clearly topping much earlier than the actual Dow. Here's a top inside the transports, November, like Jay in the Den points out. We didn't get a top inside of the Dow until May of 2015. Not unusual if you go back historically and look at it. There's been 4 or 5 significant periods of time where we've seen this topping pattern. Now, many believe that was a real signal of a market that is going to correct in a big way. I don't know whether that's the case or not out here, but it is the presumption that many of us are under. But certainly, I think that it says to us, if we take a look at the transports here, this, by the way, is a weekly chart, right, that we're looking at. You can see on a weekly basis the transports here have done very well, done actually better than the Dow out here. So if you are in the camp that the transports are a leading indicator to the downside, you clearly must be of the same opposite opinion, that the Dow transports are going to be an early indicator of a market that's going to find a bottom out here. So that's got to make us say, something to think about. Now, if we go back and we take a look at, I don't know if I can do that here. I'm going to go ahead and, where can I do this? Okay, chart number 3. Let me delete this. Okay, there we go. Now, if we take a look at the transports, I just want to focus on the transports for the moment. I'm going to put this back to a weekly chart, because one of the things that we go back to, I've got data here, goes back to 1980, so we could take a look at all those patterns out here. But I'm just going to stick with the current pattern. And we looked at the NQ. We know that the NQ did not break its downtrend out here. Oops. Now, if we take a look at the transports, we're coming off of the lows here in March of 2009, and our next touch point with regard to the transports out here, and this is really interesting, we're using here as our touch point from a trend. The trend is our friend, was October of 2011. I don't have my data. There we go. Let me see here. That price point, by the way, just so you know, was down at 3950.66. And we can see that where price came back to after the topping pattern, that formed inside the transports. Price came back in the transports right down to its trend line. It held its trend line. Let's not worry that it looks like it's just a smidgen, maybe below it in the month of January out here. But just, I mean, really came right down to it. Got a nice little piercing candle. Happens to be a potential bullish reversal signal. There's a bullish reversal signal out here. It just really depends what happens the next month. But the transports came right down to their trend line. And the question is, and this is what's going to be important for you and I to really understand the months ahead, the roadmap ahead, this shows us how important that trend line is. If, in fact, we see the transports take out this month's low, they don't even have to take out last month's low. So this month's low, by the way, is 66.55. And a bit of change out here. What we'll know about the transports is they will have broken their trend. But at this stage here, they just simply corrected and came back to their trend. Now, if we take their trend line, now if we take a look at the Dow out here, $INDU. So if we take a look at the Dow, no, by the way, on the transports, give me a second here. You don't really have a choice, but here, I'm going to do this. Let me put this chart over here on my screen. And we can see that in the case of the transports, they were moving lower, doing it with less relative weakness back here on January 20th and January 21st. So the same kind of topping, bottoming type patterns that you and I look at. We like that in the 5-hour charts, 30-minute charts out here. The Dow transports, as they were coming back to their trend line, right? Monthly, if it come back to the trend line on monthly, certainly they're doing it on a daily, certainly on the weekly out here. It gave you a bottoming type signal out here. This is also kind of interesting because for those of you that are Chapman Wave aficionados, and that should be everybody in the audience out here, of course, Stevie loves to just look at that 7th inning stretch pattern out here. And what the transports did on Friday, what was interesting, is they were able to spike up above the high from February 22nd out there. Now, normally when you see this kind of pattern evolve out here, just tells you that things are strong. They've recycled. It just blew past that wave out here. We need to still see a higher close, in my opinion, but we did get a recycling bottom out here inside of the transports. And that's what led me back to go in and take a look at the trend line inside of the transports as well to say, well, I need to go back and look at what we've done here on a monthly basis. Now, if we take a look at the Dow, so are the transports, if you are one that firmly believes that the transports are the early warning signal for a market top, you gotta be drinking from the same cup of soup out there, or whatever it is you might be drinking from. You've got to believe the exact opposite is true. And price came right down to the trend. If you believe the trend is your friend out there. Now, with regard to the Dow, I believe the trend is your friend. You got to find some friends out here. And inside the market, here's where we've got the Dow. The Dow clearly has broken its trend line. Right, it broke its trend line back here in the month of January. And this month here, we've seen a spike, in essence, try to get back up and test it. Now, what we've seen, and unless there is just some huge move into the close today, inside the Dow, prices come back to the trend line and has tested and it's rejected it. Not until it gets back over that trend line can we say that it was a false breakout to the downside. The transports are going to really be a key here because they have not broken down. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So, we're taking a look at the transports here before that break. So if you go back to 1970, that's how far the data that I have went back to, the correlation on the monthly chart between the transports, directional correlation, was 79% out there. And that's on the monthly basis. On the weekly, it was 80%, going back to the same time period. And on the daily basis, it turned out to be 77%. So I give you exact numbers. Now, we know that the transports, they typically can have a early topping signal for us. But remember, we're always focused and looking for levels of support and resistance on any kind of moves with regard to patterns that are out there. Since the high, by the way, here's the transports, and the actual high date that was November 28th inside of the transports. So from that high in the transports through Friday out here, and the transports certainly topped early. What do you think, directionally speaking, meaning a day closes up versus closed down, what do you think that correlation is between the transports and the Dow? With the transports having topped way early out there. And the answer is 82%. So the correlation, even since the top out here, has been a strong correlation, which is a reason why we've got to take a look at what is it that transports are doing. And having recycled on Friday, and knowing that the transports came down and held their trend line, it is certainly something to think about, at least an area where we know we're going to get a big signal. So I say it is the low from this month that is more important with regard to the transports than the lower low, which was back in the month of December, because we're in February out there. Okay, so that's it for that set of correlations. Now, I guess what I'll do this here is take a look at the S&P 500, right? So SPX. Let's take a look at the monthly chart that is out here. And on the monthly chart, give me a moment here to do something else. You might say, why? And I say, well, so that I can give you good information, good data. That's why. So on a monthly basis, as we take a look at the S&P 500, now here's data going back to the mid-80s out here. I don't know how the S&P is going to close this month, but let's take a look at a couple of things out here. Let's go back and take a look at its trend line as well. So we look at the trend line for the S&P. We're coming off of the low here from March of 2009. Clearly, we're using just simply as our, look at that. The price has not even come back to the trend line. inside of the S&P 500. Has not even tested. Strong like the NASDAQ composite, not as strong as, but its trend line hasn't been broken. Hasn't even been tested. And on a monthly basis out here, you know, you've got the bulls, you know, have set up and they have identified for us their level of support out here. And that level of support, really, if we were going to draw a horizontal line, we're going to simply draw it. You know, it's really off of this level right here. Here's your first bullish reversal signal. You got this nice big old bullish engulfing candle. So that says the low of the candle that it engulfed. That actually, let me change this here. That was not the correct tag, but I'd like to be accurate. And if we take a look at where there's really support inside the S&P 500, it's 1871.91. Now, others might say, hey, look, right now you've got a hammer candle that is formed, and we do. Just depends on where the S&P 500 closes out today. But if we're closed right now, 1951, you'd have a hammer candle. That's just confirming support out here at 1871. If price breaks through that, you've got to see what happens as it gets down to that low out here. But the S&P 500, the NASDAQ composite, the Dow transports even, you know, look pretty good out there. If we take a look at the New York Stock Exchange, you know, not so much. If we take a look at the New York Stock Exchange, this is the index here that has certainly broken its trend line. Let's go see what it is doing out here. So here's our trend line. We know that the New York Stock Exchange came up, tested the trend line. Well, it really didn't test it. It just simply broke through it last month. It never has come back up there to test it. Don't know that it will get up there to test it. But you do have a monthly hammer candle that has formed thus far. We'll see how the New York Stock Exchange closes out its session here for the day. But in order for these markets to really say, hey, guess what? It was just simply nothing more than a bear trap out here, we're going to want to see the New York Stock Exchange get above that trend line out there. So the Dow's got a little bit further to go. Transports, we know, have held it. If we take a look at, so it was a near term to go to full check. My account might be bearish near term. I'll have to talk with Bill during the breakout here because I'm not exactly sure what he meant. But if we take a look at, so you got the New York Stock Exchange. What else did I want to put up here? Oh, the Russell 2000. Let's go just check in on the Russell 2000. Look at what it is doing out here. So the Russell 2000, you know, clearly a heck of a month in February for all of the indices out here. And you got hammer candles that are forming, right? We know the importance of the hammer candle, right? You close below it, you're long, you're wrong. We know the importance of the shooting star if you're short, abort, right? So we've got our rhymes going here. And if we take a look at the trend line here for the Russell, look at this. I mean, the Russell 2000, right, which has been attacked, and it is really not, certainly hasn't done a whole lot out here. But, you know, what's your call when you take a look at this? Russell 2000, has it broken its trend or not? I've got to go with not at this stage out here. Certainly not broken with any kind of conviction. Yeah. Do we have some intra-monthly moves to the downside? You know, some scary moves to the downside? Yeah, absolutely. But the trend is still your friend, and the reality is, the interesting thing here, right now as we speak, the trend is still our friend inside of the Russell 2000. You can't call it any differently than this, because it is what it is out there. So that's the Russell. So we've only seen the New York Stock Exchange, right? What else would be good to look at with regard to trends? We know the composite and the NDX hasn't. We looked at the Dow, which has just slightly. Looked at the transports. Let's just finish it off here and go take a look at the semiconductor. Whoops, that's not going to put anything out there, but let's try to actually put the correct symbol, SOX, and then we can take a look at the semiconductors. Let's go see what they've done out here. And we're going to go back, in this case here, we're going to go back to 2008 when it put in its low. So that's going to be our trend line. And as we take a look at its trend line, it hasn't even come down to its trend out here. So that's kind of interesting. If I don't know, I guess, you know, yeah, it has not broken its trend. It's really not that complicated out here. Not an overly bullish. You can see that big old key reversal monthly candle out here. This is the month of June 2015. That's going to be your real key level that it needs. And you can see how that has acted as resistance on any types of moves to the upside. Again, just looking at a monthly chart out here. Let's go back to a horizontal lines. Let's make that a red line out here. So you can see that little key reversal on a monthly basis. I'll give you a great message that that certainly there was a move to the downside out here, and we can see how this acted. 677 has acted as a resistance line. Then any moves higher, that is in fact what has to be cleared out there. So let's take a look at the monthly charts out here just to get a feel for and the flavor for what's going on inside of the markets. And we got to keep track of what's going on in the longer term. So let's go take a look at some other things that are moving inside of the markets out here. Hey, we talk about moving. The euro Japanese yen just is folding over so quickly. Big move today, currency-wise. This thing, as we pointed out, clearly ready to form an A to B equals CD. In this case here, that A to B equals CD pattern, this is going to be interesting here. At this stage here of the game, you know how much I love this currency pair. But at this stage here, the correlation between it and the market, there's other correlations that are just simply acting better. Euro Japanese yen on its way down to 115.46. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 29, S&P is up 4 points. So, a real review here of the monthly charts, where things are at, trend lines that are out there. I think some important points, both for bulls and bears, for each of us to be keeping track of. The case of Goldilocks, she's up $13, straight down to $12.34 as we speak right now. It's not the monthly chart. We want to look at a daily chart out there, although that was a nice move from a monthly perspective. Let's put that back out there. There's a There's a heck of a candle. It might be easier to do the continuous contract. So let me do that. You see. And a heck of a monthly candle, no question. Let's put it on a monthly basis out here. Talk about. Well, it's not that big of a deal. A little bit. So, here's our monthly chart for gold. So what do we know about gold out here? Still hasn't made its back to its trend line. Certainly, there would be your trend line. It just hasn't made it back to its long-term trend line as we speak right now. I believe you know my belief about gold, which is be careful out there. If you talk about a bear trap, I believe there's a huge bear trap out there inside of Goldilocks. Instead, I think you ought to be looking to buy the next retracement. Big retracement, assuming that it's on light volume out there. We'll see whether or not that, in fact, pans out. But the kind of interesting thing there is that I can tell you it's not just myself that is anticipating that. If that comes to fruition, and if a lot of this gold trade, we just know how much of this gold trade, if any, has been a result of the fear factor of Asia going down, our markets going down, and people rushing to that. Of course, negative interest rates. I mean, there's so many different moving parts out here with regard to the move to gold. But if it's working in opposite correlation of the markets out here. Then, and I'm talking longer term. I'm talking about, short term for the next few hours or whatever might go on inside of gold. I'm talking about a little bit longer term out there. That the next big move in gold, what I will say, I believe, comes to the downside, not to the upside out here. Okay, so that takes care of that. Light sweet crude. Now, that is worth certainly paying attention to as well out here. And in the case of light sweet crude, let me just put its monthly chart. I said I wasn't going to talk about it, but I am going to. I have to at least talk about it like this. What we do have inside of light sweet crude becomes pretty easy. From a monthly standpoint, it looks like we're even closed with a hammer candle out here. So we know that the low of this month is really important. It may also be a bottoming signal. The low there is 28.74. So as long as light sweet crude doesn't close below 28.74, it may be signaling to you and I that the bottom has been put in. Okay, we haven't looked at any individual stocks or anything out here. Should we look at something? What should we look at out here? I don't look at Hanger Corp. That's disgusting. It's down 80%. No idea what they've got going on out there, but that is pretty bad. Of course, the more I talk about it, the less we're going to even be able to look at anything. Let's go look at a gold stock. Let's do that. We can go take a look at Rand Gold. That's trading out at 90.60. We'll see what this thing is trading into. Let's put up our market profile, see if there's anything there to focus on. And the answer is no. So there's nothing there that it has to worry about. What is it trading into? Looks to me like might be a butterfly pattern. What kind of expansion do we have of swing points out here inside of Rand Gold from the February high? Yeah, down to the low in September. And it's made I do mean exact, 1.272 expansion. I don't know if it is exact, but exact would have been 93.78. It got up to 93.67. You got to like that out there. Well, folks, it is February 29th. It is leap year. I want you to stay tuned. I want you to sing a nice digital happy birthday to our polar bear, who I believe got an Academy Award last night. So have a great Monday. I look forward to seeing you on Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.